Karen Mills, thank you for joining us. We met a few months ago, back in September, in Madrid at Fundación Rafael Pino to discuss your recent book, Fintech, a Small Business and American Dream. Today we meet virtually from your home in Boston, my home here at Copenhagen, in a very unique and challenging context, the COVID-19. So today we're going to have a different dialogue, and the focus is going to be fintech, small and medium enterprises, and the response to the COVID-19 crisis. I would like to start with the first question. Why and how are small businesses important for the economy?
Mercedes, thank you so much for inviting me, and thank you to the Foundation. It's delightful to be back in Madrid, even virtually, and to be talking with you again. This subject is so important. I have never seen a more difficult time across the world for small businesses. And the reason is that for safety and health of themselves, their employees, and their communities, many small businesses have had to shutter their doors. And as you know, small businesses are somewhere between 50, 70, or 80% of the employment of nations. And as a result, many small businesses have had to lay off employees or struggle with whether or not they can stay in business. Small businesses have very, very low cash reserves, cash buffers. And in the United States, we have documented that the amount of cash a small business has on hand is less than a month, 27 days. So from the time that a small business has had to shut its doors, and this differs all around the country, in Spain it's been going on much longer, it doesn't have any revenue. It doesn't have any cash. And what happens if a small business runs out of cash is that it's dead. It has to shut down, maybe permanently. And what we know about the economy is that if its small businesses shut down, it is very hard to restart an economy. And you have to restart a brand new small business. This could change the whole nature of the recovery. So we need to do everything we can quickly in order to help small businesses in this very difficult time.
So before we discuss how to do that, why do you think if these small businesses are so important for the economy, why they're often undervalued?
Well, I'm glad you asked that because it is really something I worry about and talk about all the time. Many times, small businesses are not seen as a major player in the economy, in part because they don't even show up in the macroeconomist models. They look at consumption, and that's the consumer. They look at investment. Well, that's big business, or government spending. And small business is just nice to have in your community. But it turns out not so much. In this crisis has elevated people's understanding of the role of small business, partly because of the key number I mentioned earlier, the employment effect. So many people, this is their work. And one of the reasons in the United States where we had trouble understanding the importance of small business is that we don't even track and measure the contribution of small business. So where there's no data, there's no understanding. The good news about this recovery, at least in the U.S., is that the relief efforts have begun to focus on small businesses. And we know that some of that is just beginning, but hopefully it will make a big difference.
So there are many types of small and medium enterprises. Which ones are more vulnerable, in your opinion?
Every country has different small businesses, and all these small businesses are not the same. Now, everybody focuses in the hot times on the high growth small businesses who are going to be the next Googles and the next tech companies. And these are very important. They drive a lot of innovation. They drive a lot of economic activity because they could become, a huge force in the future. but there are actually not very many small businesses. They're less than 1% of all small businesses that get venture capital backing. Most small businesses are either sole proprietorships, meaning they have no employees, or they are Main Street small businesses. They are the shops and the restaurants and dry cleaners that are part of the fabric of our daily lives. And these are the people who are the most affected by this current crisis. And then we'll talk, I think, in a bit about supply chain businesses, which also are very important and affected.
And of all of those, the most vulnerable are, in your opinion, the ones that are going to be more vulnerable to the COVID-19 crisis?
The ones that are the most vulnerable today are the smallest. And unfortunately, they have been underserved by banks and financial institutions. So it is hard for them in these moments because they are by themselves. They don't have a venture capitalist with deep pockets to bail them out, and they barely often have credit cards or a bank. So one of the things that I'm pleased about in some of the policy making is that these usually forgotten small businesses have been remembered. And the trick is going to be to get the relief to them in time for them to stay in business. Many small businesses live on the edge. They're very vulnerable. And these next few weeks are going to really say whether they survive or they don't.
So let's talk about that. All the countries are responding, but they are responding differently. So what's your assessment of that? Are some countries doing it better? Why do we see different responses across countries to the COVID-19 business-related crisis?
Well, it's going to make a field day for a lot of economists after this because this crisis has created all kinds of experimentation in policy making, which we will study for a long time in the future. And I'm hoping we'll get some benefit of that. But what's interesting is that countries seem to have made policy based on their relative strengths, the way they do business. So, for instance, Denmark and Germany and others are making direct payments to businesses. And this could prove to be very smart. But why is it that can make direct payments to businesses and the United States can't? Well, one reason is the United States does not have a registry of all its small businesses and all their employees and all of the payments that are made. Now, it's not to say the United States doesn't collect data. We have tax data and we have census data, but we don't really have a registry in place the way other countries do. So if you said, well, let's go mail out some checks the way Germany has, it may in fact not be possible. And in the freewheeling entrepreneurial environment of America with the American dream, that might be viewed as, too much government oversight. But I will say I am disappointed that we don't have better systems because it could turn out in this kind of crisis, some of those models will be the most effective. Now, in the UK and other places, Fintech has turned out to be a really important solution. When I came to Spain, I was very impressed with Spain's Fintech community, and I hope they are activated because what we are seeing in the UK and other places is that they can provide a really important access point. And what we love about Fintechs? They're nimble. In the United States, they have been working nonstop with new coders who are trying to make a more user-friendly portal for small businesses to find and get aid. In the UK, one of the real hotbeds of fintech, we see that they were an early part of the solution. So when you don't have a lot of banks or you have a lot of people who don't have a bank that services them, fintechs can be a real solution.
So that's going to take me to the next question. So I'm going to shift a little bit focus. Let's think about the role of some key stakeholders, in particular the role of banks and the role of fintechs in helping the small and medium enterprises. And I'm going to start with the banks. So how can banks help? And you mentioned speed is important. And what are some of the challenges that the banks are facing themselves?
Well, I'm a big fan of banks. And when I came last to talk before the foundation, I said that I thought community banks could be a big winner from some of the technology changes because they have relationships with their small businesses. And as they begin to adopt more technology, they could even have a dashboard of all of the small businesses' information and then have a conversation about the small businesses' needs. Well, I still believe that, and that was a good aspiration. The downside of banks is that they are not that nimble. And technology systems in banks tend to be very staid and old and not easily changed. And we are trying to change those systems in a matter of days. So what we are seeing from banks is that they have struggled with creating the ability to distribute new aid to small businesses. The example that best makes this point is the United States. One of our greatest assets is our network of banks. We have 5,000 banks, many of them in the community, and we have some unbelievably terrific big banks, JP Morgan Chase, Bank of America, and they had been moving very far along the technology curve. But when this hit, they really struggled to get the new portals up and running. And they didn't lean as far forward into it as perhaps they might have as quickly. And they said, we're only going to serve our customers first. We don't want to deplete our balance sheet. And there was a bit of the dragging of the heels instead of leaning forward into it. Now, as days have passed, they have gotten their systems up and running. But I think this week is going to present a very interesting moment for the world of banks versus fintechs. Because over the weekend, we saw in America some of the biggest new players get approved for direct lending to small businesses through the Small Business Administration. And this is unheard of. In the past, these new non-bank lenders have not had a federal authority. Now, this is a temporary federal authority, but Square, PayPal, and QuickBooks, which is owned by Intuit, and even Cabbage have all gotten approval in the last several days. Give you an example. QuickBooks has a product they call TurboTax, and it is an engine that helps people fill out their tax forms in the U.S., consumers and small businesses. Well, the former head of Intuit told me they spent the last 2.5 weeks coding up a new program for small businesses to lead them through the Payment Protection Program, the $349 billion in the U.S., and it asks the small business a series of simple questions and then helps pull their forms together. Well, you can imagine this is just what small businesses in the U.S. have been wanting because they've been struggling with what paperwork do I use to apply? What if I don't have a bank? So you can see that in the next week, the fintech versus bank drama is going to get even more intense as small businesses say, wait a minute, this is a pretty easy way to go about accessing this program. Maybe I could do my banking business with one of these new fintechs.
So it sounds from what you described that the fintechs can be particularly important for the most vulnerable small and medium enterprises, which are the ones that you mentioned at the beginning, the smallest ones, right? The ones that they may not even have a loan, a bank account, right? But now with the fintech platforms like the ones that you have mentioned, like PayPal, Square, and others, we may be able to reach them better. So that takes me to the questions about how can fintechs, not only in the US, but more broadly in Europe, help small businesses, but also what are some of the challenges that they have in order to do so?
Well, you make a really good point about the underserved businesses. And there's a lot of concern right now in Congress in the U.S. as they think about a second policy tranche of new money for America's small businesses. And that's because in America, we made the decision to go first through the banks. And the people who get their loans from banks tend to be a little bit the more larger, established small businesses, and women-owned businesses and minority-owned businesses are traditionally underserved by the banks. In the history, I'll go to the story of Square. And, Square is the little small payment system. And originally in the U.S., when Jack Dorsey started this is Jack Dorsey, famous of Twitter, but he started Square because he saw that small businesses couldn't take credit cards. And he wondered 10 years ago, could he make it easier for the most vulnerable small businesses, the newest, the immigrant-owned businesses, the food trucks, the people in farmers markets, to have access to the credit cards. And that's how Square was born. And now Square has millions of small businesses. PayPal, which also is a network, has 10 million small businesses in the U.S. That is a third of the 30 million small businesses. So these people have established connections through payment systems with many of the smallest ones. Square then began to make loans. And the loans were $6,000 on average, which is a very small loan. An average SBA bank loan would be $125,000. So a bank doesn't even want to hear about a $6,000 loan. So this is one of the reasons I am so pleased to see this week beginning with PayPal and Square and Intuit getting approved by the federal regulators. Who may have been resistant before and say, these aren't people that we know as lenders. Because I think everyone has realized if you want to get to the smallest and most vulnerable small businesses, you need to go through some avenue where they're already connected. They already have a Square device. They already have a PayPal account. And these are going to be really important avenues. And I think what has happened in the regulators is that they have seen that they have to have what I call all hands on deck, everybody participating if they want to get the money out to all these players.
Great. So this links very well to a question that we have from one of our listeners in Spain that I'm going to read. So not all the fintechs are feeling very optimistic. And so here is the question. The fintech sector is doing better, as you said, in Spain, in particular in Madrid, here at Copenhagen as well. But the reality is that many of these fintech firms are startups, are very young. They may themselves not be fully ready. So then the listener asked which type of fintech firms are actually going to survive the COVID-19 shock. And in particular, this person suggests that is that going to be the kind of fintechs that are already collaborating with big banks, for example?
So one of the casualties of this crisis, I think, will be fintech lenders who have overextended themselves in small business lending to the most vulnerable small businesses. We were in a very big growth period. We had a lot of P2P lenders, peer-to-peer lenders. We had a lot of, new banks, online banks, and they were much more aggressive than traditional lenders on the credit that they were extending. It may well be that some of those small, less well-capitalized lender players will see a very high default rate. Because unfortunately, we're going to lose across Europe and the U.S. And the world a lot of vulnerable small businesses just because this is too big a shock for them. And I hope it's not the case. But you could see some of the fintech community not making it because the increased loss rates of their loans. Now, the ones that you point out who are what I call more infrastructure players, they are providing systems inside banks, I think may have a benefit from this. I'll give you an example of Numerated. Numerated is a small business software. It was built inside a bank called Eastern Bank. And they brought in a bunch of entrepreneurs. They put them in a glass box inside the bank lobby, and they let them create a small business loan product that was highly automated. Now, this bank was not your most forward-leaning bank. It was a 200-year-old, which is old for the U.S., mutual bank, and very traditional environment. But it did give birth to this new Fintech company, which it spun out. And the spin out, Numerated, is in the business of providing automated systems to small community banks so that they can do some more technology. Well, of course, the Fintech was doing okay. It had, 100 or 200 clients. It was slow to convince a community bank to sign on and create all this change. In a matter of 2 weeks, another 150 banks signed up. Why? Because they realized in this crisis that they could not deliver to their customers an automated connection to the SBA new loan funding without this technology. So I think we will have the unintended consequence of some really positive reaction for some fintechs, and maybe they'll do a lot more business a lot faster with traditional banks than they would have otherwise before the crisis.
So this is great. You're giving us some good news for the fintechs, especially the ones that they know how to respond fast. So you were mentioning even PayPal and Square, they've been coding away in the last few weeks, right, to be able to be ready for these new loans. However, there are other fintech firms that may be to leverage. And obviously there are many small businesses that they are not solvent, they won't be able to pay those loans back, right? So that's a big risk. And then you also mentioned this very good opportunity for the data infrastructure fintech firms, like the one you mentioned, or for example, Play in the US or Think here in Europe, that actually they have a huge opportunity because they're connecting the banks and the fintechs and to offer these new services. So some good news and some less good news for the startups in fintech. So I wanted to sort of go back to the situation in the US because I know that it's changing very fast. And so, and you already discussed a little bit of this with us. What are the fintech firms doing in the US to help the small businesses? So you can think of some particular, interventions or loan restructuring that they're thinking about that could be particularly helpful for the small businesses.
Well, as you probably know, the U.S. passed a $2 trillion bill. And the very first item in that bill was $349 billion for small businesses. Now, that is an unbelievable number. When I was running the Small Business Administration in the 2009 crisis, we had, a terrible situation. We lost 2 million small business jobs in the first quarter. Well, now 2 million sounds like not very much with 6 million last week in unemployment. And we did some pretty aggressive things. We raised our loan guarantee rates to 90%, and we did $30 billion, a record year, the first year I was in office. $30 billion in a year versus we are now trying to put out $349 billion in a month. 10 times the amount of money in a very short time period. So what has happened is the writers of the bill said, let's use the network we have first, the approved banks, because we want to keep the fraud to a minimum, but we want to work as quickly as possible. So we will guarantee all of this, and then we will send out as much money as we can through the banks. That was a bit bumpy because the pipes at the SBA were not built for this volume. And the banks are not that nimble. and the rules weren't 100% clear, and it was hard to get the guidance. We have been working through that. I'm a little more optimistic about this week. But we are also seeing, as I said, some of the major fintech players get the authority, the special authority from the federal government to begin to make these particular, they call them PPP, Payment Protection Program loans. And the good thing about these loans is that they give small businesses actually a grant of 2.5 months worth of their payroll and certain expenses like rent. So they are really designed to just get the money into the hands of the businesses. Well, it turns out that a lot of businesses, as we mentioned, are too small to have a bank. They don't have a bank. And I think this influx of the fintechs who have recently been approved is going to have a longer term effect as well. I think it will show everybody that they are now part of our financial and policy infrastructure, and that we have to rethink our regulations, which up until now have been kind of refusing or slow to authorize fintechs as lenders. And I think if they can deliver on these programs responsibly and correctly, then they will earn a lot of credibility, both with regulators and, by the way, with small business owners who will trust them for the future. So this could be a really important moment. And I think the same things are going to happen in Europe. There are going to be some changes due to what happens in this crisis.
So is it an issue, though, that is true, very good news, the fintechs finally have been recognized, they're being used for this speed in delivering the stimulus package, but very few of them, right? Only the big fintech platforms that they have a lot of volume of client with many small businesses. But what about the smaller fintech firms? Are they also being able to be part of the solution to move these loans fast enough?
I think it's a mixed story. I will cite Cabbage, which is one of the smaller, large fintechs, but they have 250,000 businesses, and they moved quite quickly to develop all kinds of things. And, it's not just the delivery of the aid. One thing Cabbage did that I loved was they created a portal for small businesses to offer a gift card. One of the things everyone is trying to do today is put money in the hands of small businesses. So one way is to buy a gift card, give them the money today, and then you can go enjoy the restaurant, in September or October or next winter whenever, maybe it'll be sooner, whenever the restaurant is ready for business. And many small businesses didn't have the capacity to offer a gift card. So Cabbage underwrote these gift cards and the mechanism, and then promoted it on Facebook. That would never have happened in the past. So there are different ways, different fintechs are playing a role. There's a fintech called Acrolus, which is its infrastructure. It reads the paperwork automatically. And of course, many banks are now adopting this machine learning, machine reading of forms much more quickly in this crisis. I'll just tell you my last small business story. One of the things I think we will see happen even more is represented by a company called Alignable, which is a network of small business owners, 4.5 million in the U.S. And they have gotten together to help advise each other through the crisis and show each other where there are banks who are providing aid and assistance, where there are states or regions or governors who have a special small business program. I think in the recovery, as small businesses try to figure out, is it safe to open, that some of these small companies who provide networks and platforms for small business owners, they may see a very positive influx as small businesses talk to each other and try to move and share information as a community.
So it sounds like every big crisis brings challenges, but also brings many opportunities. So thinking, 2 years from now, 3 years from now, how do you see the role of fintech firms changing in the future in response to COVID-19, like some new opportunities that are going to be developed for this group of firms?
Well, number one, I think this may accelerate the logjam that we see in regulation, especially in the U.S. We see the UK took a leadership role in regulating fintechs and promoting innovation in banking, and they are benefiting today from their strong fintech community. I think, secondly, we are going to see the data aspect be much more valued because, as you know from living in Denmark, there is unbelievable data around small businesses. And having that data and understanding, that would be valuable in Spain. It would be valuable in the U.S. So I think we are going to sort of change our willingness and ability to collect data on small businesses so we make sure we can take care of them better. I think customers will find new fintechs that they have trust for because they have served them well. And that could accelerate acceptance of non-banks in terms of the financial services world, which, banks have always had this trusted relationship. And I think this will put pressure on banks to innovate and use technology more quickly, which will be good for the fintech infrastructure providers. So I think we're going to see a lot of change at a much more accelerated pace than I could have even imagined when I was last in Madrid.
So it sounds like with this crisis, the fintech firms, although they have many challenges, as we also have discussed, they have this unique opportunity to develop this relational trust with each of the stakeholders, with the small businesses, with the banks, with the central banks, with the government, even maybe with the venture capitalists that are going to be more excited to invest on them. So a unique opportunity, no lack of challenges.
And with the regulators, that's very well said.
So now I'm going to switch a little bit of direction. We have known each other for many years. We have been working on a big project on the supply chain economy. And as you discussed earlier on, there are many different types of small businesses. And there is one type of small businesses that we call the supply chain businesses that we know are very important for the economy. So those are the businesses that are going to produce inputs for other businesses and the government. Those inputs can be parts, for example, the parts of medical equipment. But many of those inputs are services, cloud computing services, engineering services, design, cybersecurity services. Now that we're all meeting virtually, cybersecurity also becomes super important. So we have found in our work together that these supply chain businesses are very important for innovation, for job creation, but they're also very cyclical. So they're going to be very volatile and vulnerable to the current crisis. So how can we help the supply chain businesses?
Well, Mercedes, I have been so delighted and honored to work on this project with you on the supply chain businesses. And I think the results that you just outlined are really striking and deserve a lot of reflection as the economy comes under challenge. As you mentioned, supply chain businesses are a really important part of the economy, and these smaller service businesses are a really important part of the supply chain. And what we will see here is that these supply chain businesses need a different kind of help than Main Street businesses. I've been really focusing and talking about, the cafes and the Main Street community businesses that have suffered. But the supply chain businesses are also going to be, as you mentioned, quite affected. And one of the things that I think I cannot overestimate the importance of this message. We need to pay our suppliers, our small suppliers, quickly in the supply chain in this crisis, because they are also cash strapped usually. And what we saw in the 2009 recession in the United States is that we had a lot of small business suppliers in the government. And we decided we were going to pay them more quickly. And we paid them in 15 days versus the usual 30, 60, 90 days. And later on, there was an academic paper written by some colleagues at Harvard Business School that showed that paying quickly, the program was called Quick Pay, put more money in the hands of small business owners, as we know, and that enabled them to recover more quickly and to pay their employees and to pay their own suppliers and to hire more people and to grow. So one of the things I say to governments and large businesses today, you may be tempted to stretch your payables, to not pay your bills. You should do exactly the opposite. For these supply chain businesses, you should pay the small ones immediately. You should, in the government's case, roll up a truck, take out the money, and send it immediately to anybody who has an invoice that is due in the next 30, 60, 90 days. These small businesses, Mercedes, that you and I have been studying, they are critical to the long-term innovation engine of our countries, and we cannot let them run out of cash now. They're going to require a different policy solution, and most of it has to do with making sure they get paid.
So you're saying these small businesses that are suppliers, let's pay them faster. That was the one particular program that you helped develop during the Great Recession. But not only the government need to pay them faster, also their buyers firms need to pay them faster. And so do you have some particular also recommendation for the Spanish government if they want to help these supply chain businesses?
Absolutely. They should look at these businesses, pay them faster. And the other thing to do is to think about providing special grants or subsidies or for them to maintain their employment. Because once again, we are trying to make sure these businesses stay in business. A lot of them are funding our ability to talk over the internet. A lot of them are funding our biotech research right now. So they are really critical, mission critical, but they may be having trouble in the future getting funding from their banks because service businesses don't tend to have a lot of fixed assets. They don't have a lot of plants and equipment. They might just have their human capital, not their fixed capital. And banks really like to lend on human capital. They're going to need to keep their people because their people are their expertise and their main resources. So a specialized set of funds or guarantees to banks to make sure they're still lending to these supply chain services firms, particularly the innovation drivers in there, I think might be very good policy for Madrid to consider.
So that is fantastic advice, and that's going to be taking me towards the concluding question, right? The policy recommendations. Building on your experience as the prior head of the Small Business Administration during the Great Recession, what policy recommendations does this crisis highlight for small businesses and for fintech and more broadly for data? So what are the key policy recommendations you think?
Well, Mercedes, I think it goes back to the first question you asked at the start of this conversation. How important are small businesses to the economy? And I think we need to recognize that they are absolutely critical. And the corollary to that is that they are not the same. Small businesses on Main Street may not show up in the macroeconomic models, but they are a huge source of employment, and they are the fabric of our communities. And if many fail, then it will be very difficult to restart them. So funding for what I call, in this country, Restart America, small grants going into Main Street organizations to restart the businesses that have suffered or maybe have closed their doors so that we don't have empty storefronts. Other small businesses in our innovation economy, like the supply chain businesses, like our, venture capital-backed businesses, also need policy and money to make sure we don't lose that innovation engine. But I think the most important piece is to make sure that the government thinks about small businesses in as important terms as they do thinking about, the nation and its citizens. Because what this crisis has highlighted is that they are critical to our countries, and that through no fault of their own, they are going to be put much at risk and be very vulnerable, really for months, if not longer. And that restarting them and keeping them going will be essential as a foundation. Therefore, knowing who they are, knowing how to help them, having a whole set of policies and information and data around small businesses that is elevated to the highest levels of policy making and government thinking is really mission critical for coming through this recovery and for maintaining the kind of economies that we all want for the future.
So thank you, Karen. So we cannot fail our important small and medium enterprises. Final message. I think with that, I would like to give you big thanks for sharing with us your incredible expertise on this very current and important topic. I also want to thank Fundación Rafael del Pino for organizing this event, and to the many participants and listeners. And with that, I will say muchas gracias a todos y mucha salud. Thank you, Karen, again.
Thank you, Mercedes, for everything you're doing.